Today we are going to study about cost, and first of all we study about the definition of cost. What exactly is cost? You can easily say that the cost is the amount of money that must be paid regularly to pay for something. See, whatever these days, whatever we are going to buy, we have there is some cost for that product. That is known as a these are the simple meaning of a cost. Now we have a different kind of cost. These are the opportunity cost, implicit and explicit cost, economic cost, margin, incremental and sunk cost, direct and indirect cost, fixed and variable cost. We will elaborate all the cost one by one. The first one is the opportunity cost. Opportunity cost can be defined as the cost of any decision measured in terms of the next best alternative which has been sacrificed. For example, if I have 100 rupees, then what will I do? First of all, I think, okay, I'll buy a pizza. Second option is that, okay, I'll go for a movie. The third option is that, okay, I'll go somewhere else just for explore the things. Then here I'll find the best alternative for my money. That is called the opportunity cost. The second one is implicit and the explicit cost. Generally we are unable to find the implicit cost because it will not be the implicit cost will not be added into the into our cost part. It will be the basic revenue, basic amount of expenditure which we used and which we you can say that the implicit costs are not included in books of accounts, but still they have an important role in making the decisions. See, and in the explicit costs are those costs which involve actual payments to other parties, and more explicit cost जैसे कि आपने किस पार्टी को कितना पैसा दिया, these are called the explicit cost. And both the costs have a same importance and same values and the same particular decision in the valuation of cost. The third one is the economic cost. As its name said, that economic cost means that extending the concept of opportunity cost and total cost, whatever the normal written to management or a management or capital is a minimum payment necessary for the for the production of product is called as economic cost. For example, as you know that if you want to buy some food and something else, so if there is a requirement of that particular food, so we will reduce all the expenditure and buy that particular food. That is called economic cost of a product. Now we have a fourth is marginal cost, incremental and sunk cost. Marginal cost you can define as the change in the total cost of a firm as a result of change in the 1 unit of output. See, if there is a change in the output, then there is a change in the product. So basically it will be in a short cost run. Short run में क्या रहता है, because you can everything is depend upon your short term decision making, so firm can easily be maximize their profits. See, and on the incremental cost, the total addition cost of a firm, you can as a result of implementing in major managerial decision. इसको आप ऐसे बता सकते हैं. For example, a telco, leading trunk company, and they have starting their different group. So what will they do? They need to different labor and every charges they are required for that. Then what will happen, the जो incremental cost है, that is the subset see, you can say that the marginal cost is the incremental set is a subset of incremental cost because it depends upon their efficiency and regulation. Now the last one is sunk costs. Sunk costs are those costs which are incurred in the past or as well as in the future. See, for example, the cost of inventory and the future rent, it will be charges for a warehouse जो भी large amount होगा. These are called the sunk cost. And now we are studying about the direct and indirect costs. Direct costs are those costs which can directly associated to the production of the product. See, जैसे कि हमारा है raw material, labor, machine, import time. These are called the direct costs. And indirect costs are those costs which are not directly involved into our production. For example, these costs are stationery, office and admin expenditure, expenses and other important things. Now the last one we have the fixed and the variable costs. Fixed costs are those costs which do not vary according to the circumstances and according to the change, because whatever the fixed costs are, we are already decided and we can fix our fixed costs. The second part is variable costs. Variable costs can be vary according to the time and the situation and according to the need of the consumer. The next thing we are going to study about the short run cost function, because in the cost we are studying about the two curve. These are long run cost function and the second one is the short run cost function. First of all, we are studying about the curve of a short run cost function. Here we have a curve, and the x-axis we have a output, y-axis we have a output, in the x-axis we have dollars, and here we have a average cost and marginal cost, and there is a average variable cost. The point of where these both of these they get met and intersect, these are the point of optimal satisfaction, and here they will get a maximum profit of their product and maximum profit of their product as well as their production. Now we are explain about that curve. The curve show that there is a change in the total average in the marginal cost, because the short run average is what exactly it will do. It is a U-shaped curve as you seen it earlier, and the level of output it will be minimum average total cost जो है वो आपकी minimum रहेगी in the shortened capacity of a firm. Why it is it should be minimum? Because it should be minimum because in that cost you are not able to do a change what exactly you want to going to do. So that is the main cause. You are not going to do a change, and your the profit of your firm should be minimum. And for example, you can say is that sometimes we are considering is an underutilizing its plant and machine. You see, if the production level अगर उसका less है Q1 से, तो वो 100% तक जाएगा, और उसके बाद जो शॉर्ट रन एवरेज कॉस्ट होगा वो अपने हाई एवरेज कॉस्ट फिक्स पे पहुंच जाएगा. जब वो हाई एवरेज कॉस्ट फिक्स पे पहुंचेगा तो हमारा जो बेनिफिट है वो बढ़ जाएगा. Now we are studying about the long run cost function. We used to call it long run function is the envelope curve of the short run cost function. Why we used to call it envelope curve? Because it reflects the cost curve of the product. For example, see, we have a three envelope over here, SA-C1, SA2, C2 and SA-C3. What exactly they are showing? They are showing the average cost of production at different level. हमने यहाँ पे कितने प्लांट, 3 प्लांट हमारे थे, तीनों की एवरेज कॉस्ट वी आर डिस्कसिंग ओवर है कि इसमें इतना प्रोडक्शन था, इसमें इतना, और हर की पर्टिकुलर कैपेसिटी होती है, बिकॉज एवरीथिंग है, एवरी प्लांट एंड एवरी पर्सन हैज इट्स डिफरेंट capacity. Okay, now we can say that the long run curve should be is a long why we use the long run demand curve? Because it basically used to adjust the factor of production to meet the market demand, because they can visualize the thing and they can try to meet the demands of the product. Now the second one is when the firm identified the plant size, types and sizes of equipment and any other thing, they can give the maximum output at the lower cost. See, now we have a frequently asked question that these are difference between explicit and implicit cost. Explain short run cost function, explain long run cost function. So we were studying about the analysis of cost predicted. Here we were discussing about the characterization and as well as the long run and the short cost curve. And there's a question, and if you have any query, you can post your question on your login account. Then I will give you and I will revert you soon. So and the other now the rest of the chapter we will continue in the another video. Okay, thank you.